Hello, everyone, and welcome to this session on managing your Paycheck Protection Loan. This is an ongoing series that we're curating to help you frame and respond to COVID-19, which feels like in some ways it's been going on forever. And as Gina and I were just saying, it also, I think many of us are coming to the realization that some form of it is going to be going on for a long time. So we're glad to have partners like Gina McDonald and FMA who are helping us make sense of the very fast-changing environment that we're in and how to respond to it. As I said, today we're going to focus in on specifically folks who have loans or expect to get them and how to manage those loans effectively and what we're learning so far about what's likely around forgiveness. My name is Jean Bell. I direct the Advancing Practice program here at the Nonprofit Quarterly, and I'm very pleased, as I said, to welcome back Gina McDonald, who's a CPA and has been working in nonprofit and public accounting for more years than she probably wants to say, and has been at FMA for, I think, 6 years now. And we're really grateful for your partnership. I also want to acknowledge Harbor Compliance, who's the sponsor for today's webinar. We're so grateful for that. And they work with nonprofits on all range of compliance issues. And I'm old enough to remember, maybe you are, Gina, when we had to register for charitable solicitation by hand, by state, and what a chore that was. So among other kinds of compliance, Harbor Compliance helps with the fundraising solicitation compliance. So thank you to them for making today possible and free of charge. You also see a hashtag there, NPQ COVID. We've been using that hashtag throughout our COVID specific series and welcome you making comments and making connections on social media as we go through this content. And Gina, I'm going to turn it over to you to get us started in framing how we're going to go at today's session.
Sure, sounds good. Thanks, Jean. And I'd like to welcome everyone again to our Paycheck Protection Program Loan Clinic. We're going to see how many times I can say a word that starts with a P in the next hour. But we're going to focus our next hour on talking about how to manage this loan now that likely if we're on this webinar, we have received either notice of a loan award or maybe our funds have already been dispersed to us. So let's get into this topic because we have quite a bit of material to cover, and we also imagine many of you will have lots of questions. So just to remind everyone, please, as questions come up in our time together, to type them into the Q&A box using the Zoom Q&A feature. We have 2 question breaks during our time together. So we'll monitor as we go along questions coming in. We'll answer as many as possible. We also might look for themes around questions coming in. So if you don't hear your particular question, there might be one that's similar that we will address. And you are not going to be surprised that likely many of us have the same questions today around managing PPP loan and questions around forgiveness. So with that, these are the topics we intend to chat about for our time together. There's a swirling question which was clarified yesterday that we'll touch upon briefly in terms of, do I need to return my PPP loan funds? So we'll talk about that for a moment. Then we'll focus on the allowable uses of the PPP loan. So what can I spend the money on? And a little bit quickly about how do I think about accounting for the loan once I receive the disbursement. We then will talk about Forgiveness 101, and we'll learn why we're referring to it as Forgiveness 101 in particular. But also another important component is we want to share with you some resources, somewhere you can go to find information about PPP rules, because as we know, this is an ever-evolving topic. And what the next thing we're going to talk about is the fact that there was some new guidance that came out yesterday. We also are waiting today, checking our computers every 5 minutes for likely some new clarification about the forgiveness rule. So we anticipate that hopefully say within the next 12 hours or so. So we at FMA have a PPP toolbox, the address of which you can see here on your screen. That's the place where we are posting up-to-date information. And of course, please check that if something new comes about, that's where you can go to find out the latest and greatest in terms of PPP rules and regulations. Otherwise, let's start with some high-level framing as to this PPP loan program. It's really helpful to think about the PPP loan in a few different layers, because when our questions come up, it's helpful to think about, is this a question about forgiveness? Is it a question about an allowable use of the loan? So let's see how this program builds. Starting with, at its core, it's a federal loan and it's administered by the SBA. Then we want to build upon that and understand that this loan just comes with some special conditions in terms of what we can use the proceeds on. And so it's different than other SBA loans in that regard. Then we layer on top of that this additional feature where we have the opportunity for this loan to be anywhere from 0% to 100% forgiven. So forgiveness is separate than eligibility of allowable uses. And so this is how we want to think about it and frame the context. Above and beyond that, whatever ends up not being forgiven when all is said and done will remain a loan payable, and it will bear interest at 1%. So we find this to be helpful context as we move along and as questions come up. We also want to draw your attention to the red box at the bottom of your screen. Whenever you see in our content today, or if you were to download similar materials on our FMA website, whenever you see this red box, it calls your attention to open questions that exist. We have many open questions, or a piece of guidance that we hope to be clarified soon. So just calling that out and bringing your attention to that. So let's talk briefly about what I mentioned has been a little bit of a source of anxiety for lots of folks in the issue of the good faith certification of need for the PPP loan overall, and the question that many folks had until yesterday around, do I need to certify need? If so, how do I show that I needed the money? And should I return the dollars? So we know that originally today was the day that the SBA had said, if you were not able to certify need, if really the implication was you didn't need the money and maybe you shouldn't have applied for the loan, you could have returned it by today with no penalty. So it was a safe harbor. The new update as of yesterday is that if you have a loan, a PPP loan that is below $2 million, there is a presumption that you made that loan request in good faith. So you are presumed to have met this good faith needs certification, and you have to take no further action. If you have a loan that is $2 million and above, we know that there'll be some additional SBA review or additional SBA audit. So if you have a larger loan, 2 million plus, there will be some potential follow-up activity. We don't know yet what that looks like. So the good news is, under 2 million, we don't have to think about the question of certification of need. There's a presumption that we were able to demonstrate need. So we wanted to get that out of the way. That's the latest and greatest, again, that came out yesterday. So then jumping into the first topic, what can we use the loan proceeds for? So by now, most of us know that at least 75% of your PPP loan proceeds needs to be used on payroll. So it's also good at this moment to think about the spirit of this PPP loan program. The spirit of this was to keep folks employed and also to provide small businesses, and they included nonprofits, certain nonprofits in that definition, some dollars to pay that payroll. So at the heart of it is focused on retaining workers and paying payroll. Above and beyond that, there are some limited dollars available. So up to 25% of your loan proceeds, right, may not exceed 25%, can be spent on this short list of other kinds of expenses, which are limited to rent, utilities, mortgage interest, interest payments on other debt obligations, but with the additional feature that any payments of those expenses have to be made in connection with arrangements that were already in place by 2/15/20. So what this means is, this is about business continuity, not business expansion. If you have a new lease, you're renting a new space and you just executed that lease maybe in March or in April or even on February 29th, rent for that lease would not be an eligible use of PPP, right? So we have to have had those arrangements in place on by 215. If so, they would qualify, again, only up to 25%.
Gina?
Yeah.
Sorry to interrupt. We're getting a whole lot of questions about what is allowable as a utility.
Sure.
Everything from, the telephone to Dropbox to IT support. So we get the point about not expanding. It has to be existing, pre-existing expenses by 215. But how broad is that definition of utilities in your understanding?
Great question. Before I answer that question, I'll just call attention to one thing at the bottom of your screen, and then we'll address the utility question and probably lots of other questions that come up around eligibility. Because really, here's the complication. The guidance is not that specific in a granular way. There's some specificity that we can talk about. We're going to likely come away with lots of nuances of the way our expenses work that we will have to make a determination, but we won't find specific guidance. So let's talk about that. So just a reminder, this is the high level, what we can use the money for. There are consequences to spending on unallowable expenses, right? So we do want to stick to the list of what is allowable. Here is some more granular information, both about the definition of, what does it mean to spend on payroll? And this also touches upon how can we think about utilities. So let's talk about this at a little bit of a granular level. So if we look at our top band here, what is allowable? We understand that we have to spend most of our money on payroll. Payroll is defined as gross salaries, wages, which could include paid leave, could include severance potentially. Think about it as anything that's going to be gross pay in your employee's W-2. So those types of wages. We then can also consider in this broader category of payroll, employer paid, so company portion of health benefits. We understand health to be medical, dental, and vision. So also want to mention, we do not understand that benefits extend to anything that would include life insurance, long-term or short-term disability. So these are the kinds of questions we're getting around benefits. Right now, it does not look like benefits were intended to be life insurance or disability. So right now we understand, again, health benefits, medical, dental, and vision. We also can use PPP to pay for a company paid portion of retirement benefits. So this is your 401k match, or 403b match, things of that nature. We also can use PPP to pay for any employer paid state or local payroll taxes, if anything like that exists where you're paying payroll. If we drop down to the couple of starred items at the bottom of the screen, we talked about that group health benefits include medical, dental, and vision. But we do have a limitation on the gross wages. So in terms of what is not considered to be gross wages, right now we're gonna think about what can I not count as part of payroll. Well, we have a limitation on how much per employee per week we can use PPP to pay for. So PPP is going to limit paying up to a $100,000 prorated annual salary per employee. But what that means is, if I took a $100,000 salary and divided it by 52, that gives you a weekly pay of $1,923 per week gross. That is the maximum per employee per week that you could use PPP loan proceeds for. Okay, so that's a limitation, and that's how that works. Of course, for that individual, you then could pay for their medical benefits, right? It's not total comp if that's the gross pay limitation. We know we can't use PPP to pay for payroll related to employees who live outside of the US permanently. We cannot use it for any kind of federal employment taxes. So FICA, we can't pay FICA, so not your Social Security or Medicare with PPP. And if we're already being reimbursed by another program, of course, we couldn't also be using PPP to count those as wages eligible for this program. In other words, if we have folks maybe who are on extended sick leave or Family Medical Leave Act, there are other provisions that allow for you to be reimbursed for those wages and not PPP. So you're getting credits for paying those folks. You can't also count wages that you got credits for towards PPP. And a reminder, your independent contractors, right? Folks who are not your employees, folks who at the end of the year will receive 1099s. Any compensation you pay to those folks are not considered payroll for this purpose, of course.
Okay, Gina, thank you. Hopefully this slide, just to give people a sense, we do have thousands of people on the webinar and hundreds of questions so far. So as Gina said, we are looking for themes, and I think this slide has addressed any number of questions that people have about healthcare, health benefits being covered, maximum wages, and no to contractors. We've had a number of questions about contractors. Hopefully that also covers off on the utilities question. We do see internet there. We've had a number of questions about bonuses. Do you have any guidance on bonuses as part of allowable compensation?
Sure. Bonus is a big question. Hazard pay, other kinds of pay, additional pay for folks. So here's what we'd like to mention is that it might be helpful to think about what fits squarely in the definition of an expense being allowable for PPP. So meaning, we know that bonus is going to fall under the definition of gross wages. We know hazard pay will end up in someone's gross wages as well. However, there are some aggressive, say, approaches that might indicate that we could and should do all sorts of things like maybe give folks extra weeks of pay during your 8-week spend down period, or pay bonuses that we wouldn't otherwise have paid. And so that might be, say, a more aggressive position to spending down these dollars. The message is the guidance does not indicate if that is okay or not. There are some, and really this is a legal, there are some attorneys that say that wouldn't be allowable. There are other folks that are thinking aggressively and are advising go ahead and do that. We're taking the position that if we normally would pay bonuses, right? And this might be the normal time. And typically, maybe I'm a June year end and maybe June 30th is in my 8-week period. And I typically give folks a small bonus, and this is my normal way of operating. We're advising, do what you normally would do. If you feel like you want to do something out of the ordinary, it is helpful context just to understand that that's a gray area right now. So if you do it, just know you've got to be on the lookout for maybe some clarified guidance that comes out that may indicate whether or not that will be able to be counted for PPP.
Great. Two more things on payroll. Also on payroll processing fees, would you see that as included?
So not any kind of admin fee, not payroll processing fee.
Okay. So a lot of questions on that. That's a no. And raises, can I apply that same thinking you just said? If you would normally do raises at this time and they're within your normal track record, then perhaps you would be comfortable doing that.
Yeah, I think that makes sense, is that if this is something we normally would have done, then it seems like this is more, again, in that spirit of the continuity of what my operations would have looked like. Mm-hmm.
Right. And I mean, your overall guidance to really understand what's the spirit of this loan, however problematic the rollout or the lack of specificity has been, that's always helpful, not unlike when we manage a grant or a contract. But what's the spirit here? What are they trying to get at is really helpful guidance. All right.
Yep, absolutely.
Carry on.
And just before we leave this slide, I will point out, if folks didn't notice, that there is some more information here about utilities. So utilities we understand right now to include things like water, gas, electricity, transportation, which transportation we understand to be related to not nonprofits, but separately, which we're not going to talk about today, independent contractors as their own entities could have applied and received PPP. They have different kinds of expenses. We understand the transportation to be related to those folks. That's an operating expense for them. Internet and phone. So we hope that that explains a little bit more about what was intended with utilities.
Okay, and I'm gonna, before we move on, we're still getting questions about need. So perhaps people stepped on a little bit late. Can you just reiterate briefly the updated news about the 2 million safe harbor?
Yep, absolutely. So the news as of late yesterday was, if your loan was under $2 million, then there is a presumption that you meet the certification of need automatically, and you don't need to do anything else. So loan under 2 million, you are covered automatically. It is presumed you needed the money, do nothing else.
Thank you.
Yeah, absolutely. So a couple of more quick things, and then we'll take a couple more minutes for questions maybe. A big question that I didn't hear yet, but that is also weighing on everyone's mind, and I know there's lots of words on our screen right now, but I'll kind of boil them down for everybody. The question, we just talked about what kinds of expenses, right? The nature of the expense. There's also the big question of what is the timing that I have to either pay or incur the expense? So we know we have this 8-week spend down period, which starts with the date of disbursement of your loan. And then during that time, we know that we're going to use PPP to pay for payroll in the 8 weeks. We're going to pay for rent in the 8 weeks, up to 25% of our expenses. But what does it mean to be an expense for the 8 weeks? Is it folks who work through June 14th, if, as in this example, the organization's 8-week window is April 15th to June 14th? So if an employee works through June 14th and then gets paid after, because that's how I pay payroll, is that okay? Do I consider those wages for PPP, or is it what was paid in the 8 weeks? Similar question to rent, right? If I paid my April rent in March, how does that work? So we're recommending that you consider the accrual basis expenses. So we're recommending what is incurred in the 8 weeks. Again, we're really hoping that guidance comes out around this. You also could consult with your lender. We're going to see in a moment when we talk about forgiveness, your lender will be, of course, you've executed a promissory note. You're going to have to certify to your lender as to how you use the funds, and certification around your eligibility for forgiveness. So look in your promissory note to see if any more particular language exists, but we're thinking that this is the spirit of it, is providing payroll for 8 weeks, and kind of goes along that line. In addition, another big question is what we're calling the classic double dipping question, I guess. And nonprofits are likely really familiar with this concept, meaning, what if I have another funding source or another revenue stream that was going to pay for the payroll in that 8-week period? What do I do? How does that, it's really a question of how does that other funding stream interact with PPP? And I guess we'll say this. It is not likely, if you use PPP loan proceeds to pay for, say, payroll as an example, in the 8-week period, that a funding source like the federal government would consider that expense to be allowable and eligible for reimbursement by your federal grant, right? And so really, this is the thinking that we want to employ with our other funding sources as well, right? So consider comparing your allowable expenses for PPP versus both your federal contracts and other contracts. really do a matrix, what is covered with what funding source and for what time frame. Because remember, PPP has that short time frame. You may have opportunity to either use your other revenue sources beyond the 8 weeks, use the revenue sources for other expenses, but we are suggesting that you have conversations with those other funders. Today, we're understanding what can we use PPP for. We've got to have a similar consideration as to what will the other funding sources allow.
It's kind of an interesting intersection with this 2 million, you don't have to prove need point, because I think there's a relationship between proving need and double dipping. Do you know what I mean?
I do. And that, and I guess, you know, some folks have also asked the question in a way that makes you wonder, if you had another funding source and you're asking this question, did you need the money, right? That's what we're saying.
Right.
I guess it also remind folks, PPP is a really short window of time, right? So as you're documenting, maybe in this moment, and lots of folks are suggesting documentation, and we are too, you know, regardless as to whether someone's going to ask us to prove our need, we're going to document our rationale maybe for how our dollars were spent, things of that nature. Maybe the board is having a conversation about this. Maybe we're having internal conversations to try and figure all this out. So, you know, I'm wondering if simply having funds for 8 weeks, you know, that doesn't mean I had funds on week 9. It doesn't mean I had funds on week 10. So really think about how would you tell that financial story and document it now in the moment.
Yeah, and is the double dipping, is this what you're saying, during the 8 weeks or for the fiscal year? You know, as we always talk about, you may have a funding source for those 8 weeks, you may have a contractor grant, but you still may be way short for the year in revenue.
Right. Mm-hmm. And how likely is it that all of your funding sources cover 100% of everything for the program?
Anyway. Mm-hmm.
Right. Right. So really, again, we're experts. Nonprofits are experts on how to weave together our funding. And this is just another moment where we're trying to put that puzzle together. So I guess, Jean, I think even though we've been answering questions, we have time for a question or two if you see something that's related more to eligibility before we move on to the accounting and the forgiveness.
Yeah, no, there's still a lot of nuances about contractors and people that have been sort of furloughed or not on assignment coming back to work. Do you want to talk a little bit about that and how that plays into the PPP allowable?
Sure. So we're going to touch upon, we'd say, lots of folks are trying to make decisions about bringing people back on the payroll. Mm-hmm. For a couple of purposes here. First is we know that we need to use most of the money for payroll. So then we have the complication, well, what if I'm not paying as much payroll? Because this loan was based on 2.5 months of what my payroll was last year. Right. So now I might have a larger sum of money. That might be way more payroll than I need right now in this moment because folks are either furloughed or laid off. So certainly we understand that we may be trying to make decisions right now to bring folks back. Let's talk about that more in the forgiveness moment because there is this concept of also not only using for payroll, but having to maintain an FTE count.
Right.
So, and I guess just a little preview into that, you have options. You could invite back folks who are furloughed and you could pay payroll that way. You could hire back folks who are unemployed and have them be on your payroll that way. We know that the SBA has put out some guidance that says, if you're asking back, and it's in a formal documented written way, inviting back to work someone who's laid off and they refuse. Because right now a big complication is folks making a little bit more money on unemployment, maybe than you're going to be paying them as an employee. So if you show evidence that you tried to do that, and it's in a written way, then later when we talk about forgiveness and we talk about maintaining our FTE count, we will not be penalized if we in our FTE count if we asked someone who was laid off to come back and they refused work. Of course, that still doesn't help me spend money. Right? I still then am back to, I have to spend this mostly on payroll. So if you need workers, right, if you need staff, you are not prohibited from hiring new folks. So you could also hire folks who were not on your payroll before. And so that's an option as well.
Yeah, I mean, if it's fair to say, if I'm hearing you right, Gina, I mean, if you really are one of the nonprofits that has had to do a major reduction in force, or even sort of near hiatus, this isn't the loan for you.
Yeah, I mean, ultimately, if you're not providing services right now, and so I guess if you're not providing services, PPP also knows that this could be a time when we're paying folks to stay home, and you could use it for that payroll.
Right.
So you could definitely pay folks to stay home, even if you're not running programming. However,
but I'm saying if you've separated, if you've had a reduction in force, this is going to be a tough one.
Exactly. So I mean, the fact of the matter is, if you're really jumping through hoops to try and pay it on, to try and find payroll to spend it on, this may be the moment where you say, well, maybe I do want to give some of this back. Maybe it really wasn't for me, if I truly, because that really is the purpose. So why don't we move along and talk quickly about the accounting and then get into forgiveness and see what other kinds of questions come up. So just a reminder as to what kind of path we are on here. So we're on a path that starts with the moment when funds are dispersed to us. We have to figure out, is our general ledger ready to accommodate recording this loan and all the activity that goes along with it, which includes interest expense and keeping track of what we're spending on PPP, so how we tag and code the expenses that are eligible. And then later on, what will I have to gather in terms of paperwork to substantiate my certification for forgiveness. And then maybe not all of my loan is forgiven, so then I will be preparing to pay back what isn't forgiven. So first and foremost, and we really can't stress it enough, please read really carefully your promissory note. I mean, that's really the contract you signed with your lender. So step one, read the note. We're seeing promissory notes have just lots of variations. Some are really, really simple, 3-page note. Some are longer kinds of contracts that have some details within. So really important to read your note. Ask your lender if you have questions about anything that you're reading. Then when we receive the loan disbursement, we want to think about, what do I need to do from an accounting and record keeping perspective? So if you already don't have a general ledger account to accommodate booking this liability, right? Because remember, loan, and then you're going to create a new liability account on your balance sheet, PPP loan payable. We then will also make sure that we have a revenue account. Maybe it's titled something like forgiveness of debt, something of that nature on my P&L for later on to handle any forgiven portion that will convert to revenue later on. And then of course we need an interest expense account. We then want to think about, how do we track other kinds of expenses related to our other funding sources? So as Jean mentioned, we have, grants and other kinds of contracts that we are coding and tagging expenses to. We want to consider PPP in a similar way. So this would be a funding source that we're going to set up. Maybe we use QuickBooks and we use the customer feature for that, for instance. If so, we would have the PPP loan customer and tag all those expenses that we're going to count as eligible towards PPP as associated with that funding source in our general ledger. When we receive the cash, then we offset the liability 100%. It's 100% loan at the moment we get the proceeds. And then of course, many of us are going to start doing some of the thinking that we just started right now. Well, now that I have the money, do I have to think about adjustments to personnel? Am I bringing folks back on payroll? Things of that nature. If anyone's interested in more of a step-by-step journal entry debit and credit guide, there is an appendix in this fuller slide deck that's available on our website as well that gives fund debits and credits for accountants like me who like to look at those types of things.
Gina, are you recommending that people actually segregate the cash? We have some questions about a separate bank account.
Got it. So SBA doesn't have that requirement. Unless your promissory note has that requirement, unless it says something like you may not commingle, or unless it talks about segregating, then that would be at your option to do so. We typically don't recommend it broadly, just because of the complication it might cause. What we are worried about is, say we've been hearing things like, I'm gonna set up a separate bank account and I'm gonna have my payroll pulled from that. Well, I worry about that because we can't use this for FICA. And so, right? And so if your whole payroll means I'm gonna have the payroll company sweep from that account, that would be too much, right? And we also wanna be careful that maybe I'm slicing and dicing my payroll. Maybe I have to reduce the PPP amount for, you know, what I got credits for Families First or things like that. So do it if you think it's ultimately necessary, but not a requirement.
I have another question, and again, there are some differences and distinctions, of course, about how you track this relative to how you might track a grant or contract that had restrictions associated with it. And in creating that customer in QuickBooks, say, which you alluded to in the last slide, is there any concern about creating a paper trail when we want to maintain total flexibility as we continue to analyze what revenue's coming in? I get nervous about knowing what I'm going to decide is PPP eligible at the time of transaction when things are so dynamic. Do you know what I mean?
I do. I do. So I guess think about it. So everybody is in this same position right now of trying to juggle the complexities of our revenue in the first place. This moment where we also have the unusual situation of our expenses also in flux. Usually our expenses are pretty stable, right? We know who's on the payroll. We're trying to find money to cover it. But usually it's still pretty good. Like, well, this is my payroll. We have payroll in flux, right? Changing, you know, workforce, changing expenses. Also, our revenue is in flux. Also, this added complexity of we don't know all the rules right now. We're trying to make decisions knowing the rules could change. Totally understand that it's as much variability as we could ever imagine. In that case, just know that keep your paper trail. If later on when we talk about forgiveness, or say we talk about eligibility and more rules come out and we decide that we initially coded something to PPP that we know was in the gray area, it came to be that it wasn't allowable. Okay, well, do the good things that you would ordinarily do even for a grant and back that out, right? You have opportunity to revise that in your own general ledger. Of course, we always keep paperwork for our journal entries. We go through a transparent approval process for whatever we book in our accounting records, but we have opportunity to correct.
Right.
So we will submit later for, you know, to evidence to our lender what we used it for. So we have opportunity to correct.
I just know, as you do, that sometimes people get this sense of locked inness when they code something, and so I think there's a little bit of gray here, as you said, given all those factors about what kind of a system do you use for coding, and how is that system going to adapt to this very unique moment with changing rules, sort of questionable forgiveness, et cetera. So just keeping that in mind in terms of the amount of work you're creating and where and when that analysis is going to happen, I guess is what I would offer.
Yeah. If you really think it's in flux, right? So there are some organizations that are busier than ever. Right? There's lots of demand for their services and they've got lots of payroll. Maybe those organizations don't have an issue with spending on payroll. I have some organizations organizations I'm talking to that are saying, can I spend 100% on payroll? Yes, you can. They needed the money and they don't otherwise have some other maybe restricted source.
Right.
So maybe they feel really good about that not changing and they're going to go ahead and code. They'll never have to look at it again.
Yeah.
If we're on the really, really variable side, maybe we want to put it in what accountants know as some kind of a holding account that to be allocated later when we do the grand analysis in the end as to how it all shook out. We could do that too. But however we get there, when all is said and done, we do want the record to show that it was ultimately ended up in the general ledger in the place that supports ultimately who's going to pay for those expenses.
Super.
Yep. So speaking of, we're going to pay our expenses as we normally would. We're going to pay our AP, pay our payroll. However we decide we're going to track and code the expenses, we're going to go forward with that. We also are going to book interest expense 1%, accrued monthly at 1%. And reminder, we're also tracking that open question. We'll alert you if there's anything new to consider about the timing of the expenses. Later on, after our lender gives us determination of forgiveness, we then will book a journal entry, will reduce our loan payable for the amount that is forgiven, and that will convert to revenue. So then we'll be able to increase that forgiveness of debt revenue account by the amount forgiven. The pro rata portion of interest that we booked also is forgiven. So in a world where we have 100% loan forgiveness, we would have 100% interest forgiveness.
Right, and I'm sorry, there are questions about when the interest began accruing. That's upon payment of the loan?
Date of disbursement.
Date of disbursement, yeah.
Yep, yes. Yep. So let's get into our conversation about forgiveness, if that's okay, to try and save as much time towards the end for all of the forgiveness questions we can anticipate coming in. So again, lots of words here, but I'm going to summarize in that there are a couple of things here we have to track because we know that we have possibility for up to 100% of our loan to be forgiven if we spend in the 8-week period, if we keep or increase our FTE count, if we maintain salaries of our employees, and of course, if we only stick to that list, that short list of allowable expenses. That little first paragraph really contains all the things we have to track. First 8 weeks following loan disbursement, maintaining or increasing our FTE count, maintaining salary levels, and sticking to the short list of eligible expenses. So these are the things we're going to keep our eye on. Know that if we have to decrease salaries, take deep pay cuts, meaning decrease salaries by more than 25% for folks who make under $100,000, or if we are not able to maintain our FTE count, we will have less than 100% forgiveness. We start to have a prorated forgiveness. Now, I know there's some dates at the bottom of the screen. Hold that thought. We've got something else coming up that has more dates than we ever could hope for that we'll have to figure out. So as a reminder, what can I do right now? Regardless as to what the clarified guidance comes out to tell us, we need to know how much we're going to spend on payroll and those other expenses in the 8-week period. So this is what we can start to plan for. We can start to estimate if we think we're going to have any workforce reduction or wage reduction, right? Does it look like I'm going to be able to maintain FTEs or not? Did I make plans to reduce salaries in a deep pay cut way? If so, am I bringing those salaries back up? What does my ratio of spending look like? Right? Once I analyze what I'm going to spend, am I at least spending 75 on payroll? And what about that analysis of those other restricted funding sources? So these 4 things are things we can do right now.
Okay, and that comment you made about am I bringing those wages back up? What did that mean relative to this?
Sure. So let me flip to something that looks like a complicated equation, but it can help to answer that question and to walk us through the forgiveness consideration. So it starts with the amount of the loan we're going to spend on allowable expenses during the 8 weeks following disbursement, right? So first things first, what am I spending it on, right? I'm doing this motion.
I can do that.
Yeah, what am I spending on in 8 weeks of my loan only on allowable expenses? So I've got that number. Let's presume in 8 weeks, I spend all of it on allowable expenses in at least a 75-25 ratio. Great. Step 2, I've got to track some kind of average FTE count. So what are my average number of FTEs per month during my 8-week period? And so we're going to do a simple example. During my 8-week period, I had 10 FTEs. Okay, that's what I use for my PPP loan. I'm going to compare that. And then you're saying, well, I have to maintain FTEs compared to what? Compared to what period? Here's where we see 2 dates, option 1 and option 2. You're going to compare during the 8-week period as to that 10 FTEs. Did you have more than 10 during the period under option 1 of 2/15/19 to 6/30/19? So this time last year, what was your average FTE count? So that's what you're going to compare the 10 to that you had in your 8-week period to make a determination as to whether you maintain the FTE count. Or you also have the option to compare your FTEs during the 8-week period to a more recent date, more recent time period of, under option 2, 1/1/20 to 2/29/20. So I get to choose one of those two as my comparison period for purposes of, did I maintain FTEs? Notice down at the bottom, the last thing on your screen, if you consider yourself to be a seasonal employee, there's a different, there's a third option for a comparison period. But let's presume we're going with option 1 here. So let's presume this time last year, I also had 10 FTEs and I'm paying 10 in my 8-week period. So I will not have a reduction in forgiveness for failure to maintain FTE count. Next order of business is, did I make deep pay cuts? So if I made deep pay cuts, more than 25% for folks making less than $100,000, in my 8-week period, I have to bring those up. If I have to bring them up to less than 25% reduction. If I don't, right, if in my 8-week period, I was paying folks 25% less than I did in the most recently completed quarter, then I will have a reduction in forgiveness. So this is why we're saying, figure out if you had deep pay cuts. If you did, what does that mean? Right? If you didn't, we don't have to think about that component, okay? And that is what we know is all the components of forgiveness. Again, there are lots of dates in the mix, things of that nature. But first, let's start with, what do we know? Analyze what we can spend it on, understand what our FTE count looks like, and understand if we made deep pay cuts. We may not have to worry about all the moving parts if those are in place. If they're not, well, what do I need to understand a little deeper? Okay. I also, and I'm mindful, I want to stop for questions. The example I just walked through in terms of I had 10 before, I'm able to maintain now, is in this little example. Again, these slides will be made available to everyone. So you can study the example a little bit more, but that's what scenario 1 talks about is I had 10 last year. I had more in 2020, but that's okay because I'm going to use my option 1 comparison period, which was last year. So I'm trying to achieve 10 FTEs. Although I had some layoffs, I rehired and got myself back up to 10. So this is a way that we can kind of walk through this couple FTE scenarios. Also want to let folks know that we have a forgiveness estimator. We are purposely not calling it a calculator because this is all estimation right now. That's also available on our FMA website. And also want to remind folks that guidance will still be forthcoming around this topic. But in the least we know of those items that we for sure need to track, and we know that we'll be asked to substantiate the expenditures with documentation. So of course, as Jean mentioned, you've got your paper trail. We want to make sure when all is said and done, we have documents supporting whatever we are counting as eligible for PPP, because we're going to have to submit some certification to our lender. They'll have 60 days to come back to us with a determination of forgiveness. Right, so the lender is going to decide they're going to have 60 days. And again, reminder, loans 2 million plus will be subject to some additional review by the SBA.
And just to be clear on that last point, the fact that the only thing that's different for the under 2 million is we don't have to certify need. We still have to prove all of these things for forgiveness, right? Okay.
Correct.
And there's a number of questions, of course, about the payroll components. What about people that have to be laid off for performance or, something egregious? Is that still considered a reduction in FTE?
Yeah, so still thinking about do what you normally would do. So if there is a need for a termination for cause or not, or in accordance with the labor laws, there is no exclusion that we know of. There's no exclusion to be held harmless in your FTE count for something like that. So in other words, that would be considered a reduction in FTE. So again, no exclusion, nothing saying, well, if someone did something really bad, we know you had to fire them and we'll hold your FTE count harmless. So there's nothing like that now.
Right. So that's kind of unresolved and very well could have happened. And
right.
In larger, more complex, like direct service organizations, you can't wait necessarily to fire somebody for a cause. You could in a more of a maybe knowledge business or something, but if somebody's doing harm, you may have had to reduce force for other reasons, and that's problematic, is what you're saying in terms of forgiveness.
For right now, yeah, there's
for right now.
Right
what
now.
About if, again, it's that 8-week period once the loan was issued. So when you say restore back to, you're talking about back to that comp, whichever one you chose. But during those 8 weeks, did it already have to be restored?
So average. It's going
Average.
to be, it's an average during the 8 weeks. So, right, it's an
Again,
average.
depending on how big you are, that matters or not. I mean,
Right. And I talked to an organization yesterday who has 9 employees. He dropped by 1. So he was trying to do, and it's FTE, so he was trying to do things like round, and if I bring somebody back halfway, does it round me back up till 9?
Right.
Yeah.
That's real. And again, people are saying, well, what if the person quits? So you didn't terminate, you didn't reduce the force, but somebody resigned. Would you be held harmless there in terms of your calculation?
The only thing we understand right now that's an exclusion where you would be held harmless in terms of not affecting your FTE count is in the situation where you have someone who's laid off and you ask them to come back to work and they refused. That's the only exclusion we know of right now.
Okay. Again, I mean, I think it goes without saying that they didn't think of everything, right? And they didn't think of all of the sort of human resource realities. They came at it, if it's fair to say, very much from a payroll protection, what it's named, keeping people employed, right? I mean, it's a pretty narrow frame, and it doesn't interact very well with the realities of employment or human resources, even over a short period like 8 weeks is what we're learning here. Mm-hmm. Could you go back to the calculator or estimator slide, please? A number of people want to see that again. And so this is an interactive tool?
Yeah. Mm-hmm. Yep.
Okay.
It's an Excel tool that you can download. And actually, I'm going to actually go forward if that's okay.
Sure.
Because really all of the resources are here. If all you jot down is fmaonline.net, you'll be able to navigate to the COVID-19 response resources spot on our website. and find the PPP toolbox, and everything is there. Slide deck is there, estimator is there, links to different resources. So everything is all in one place.
Okay. And what do we know about payback? If indeed we need to give funds back, or we realize that we're just not going to hit these numbers, what kind of timeline are we looking at? Do we know that?
Yeah, so I would definitely talk to your lender about that. Because again, you have a contract with your lender, and it will be your lender who will receive the funds back. So it would be good to understand from their perspective, how are they handling that? So just like we saw so much variability in application process, we're hearing variability in disbursement process. Again, lenders will have their own process for the incoming. So check with your lender on that for sure.
Mm-hmm. And some of these nonprofit specific concerns, or maybe they're not only nonprofit specific, but the way we experience them in terms of, quote, double dipping, for instance, I mean, what sense do you have about what will be the variability and how lenders, these thousands of different lenders, interpret or even pay attention to some of the nuances of forgiveness?
So that's another great question. We're hearing lots of things like, some lenders have already come out with, I guess we want to say guidance or some preview as to what they might request later on for the certification of forgiveness. We're having some lenders say, we will ask for lots of documentation. We then are hearing others that are taking, say, a stand where, you're going to certify and it's up to you right, and maintain your documentation if someone comes and audits it or, something like that. Mm-hmm. So we believe there'll continue to be a wide variety of what it will look like. We're going to do all the things, again, that nonprofits are already expert at doing in maintaining all of our documentation. Because if anybody is poised to support how they spend money, it's us, right? We do this
exactly.
for a living.
In some ways, just irrespective of size compared to a similar size small business, we've done a lot more QuickBooks intricacies and customers and accounts, et cetera. Just finally, in terms of our own auditors, are you expecting this to affect our own auditing process in the following year?
Great question. So we are awaiting news from the OMB as to whether receipt of these federal dollars would be something that would fall under single audit requirements. So that's a similar but different question. So folks have written to the AICPA, wrote to the OMB. This was one of the many questions that was asked. So we don't have that word from the OMB yet. The folks that care about that the most are the folks who would not have otherwise had a single audit, and this would trip that requirement. So stay tuned for that. Mm-hmm. Otherwise, we've heard things like, consideration of footnote disclosures, my liquidity disclosure, subsequent event disclosure. So if your audit's coming up, during your planning meeting, first conversation with your auditor is when we want to have that discussion.
Excellent. Gina, thank you. Thank you for staying on top of this, changing your slides last night to accommodate the new SBA notice about the 2 million level, and we know it's going to keep changing. So if I was a betting woman, I'd say that you and I are going to be back soon if you're open to it. But everyone should visit FMA's toolkit, and we'll all keep doing our part to cover this and help you respond. Thanks very much.